Good morning and welcome to the Saxo Bank Morning Call. It is Tuesday, February 19th. And sort of picking up where we left off, I think, on Friday, because that was the interesting thing, at least for the biggest market, the U.S., since we had that holiday yesterday. We closed Friday on a very strong note. I have the chart here of the S&P 500 showing that we're actually managing to blast above the 200-day moving average, the 2800 area looking like the next major resistance level. On the NASDAQ 100, we're still not quite through that 7100 area, which is the 200-day moving average there. And then out in Asia, we saw a little bit of a pause overnight in Chinese stocks. And you're pointing out, we've talked about what the driver there was. First of all, Peter, I was just suggesting maybe some of this MSCI allocation could be behind some of it.
Yeah.
But you're pointing out that at least one other Asian market not quite fully on board here.
Exactly. We have mentioned South Korea's economy as very important as a leading indicator, but specifically also the stock market. And if you look at this chart, it's interesting to note that Chinese equities has been blasting higher in February, and what you're seeing with the orange line is the South Korean equity markets just basically flatlining. They're not buying in, specifically yesterday's big bounce in Chinese equities, around 4%. They're not really buying into to that. So I think that's interesting.
Also interesting, I'll say, and we've talked a little bit about this before on the broadcast, you're seeing a lot of positive activity both in the high credit space, equity markets, and yet bond yields and the sort of the safe havens are quite strong as well, so very low yields.
Yes, it's a very weird course of action, John, because what we see, we have a graph here that shows in blue the City Economic Area Index surprise. So as you can see, the European economy is basically surprising on the downside, and obviously the equities have been falling since October until now, and in orange you see that also the 10-year bonds have been behaving as a safe haven.
The negative surprise is very strong. Bunds very low, but you're pointing out the DAX has actually risen
exactly.
quite a bit.
In the graph, as you can see, since the beginning of the year until now, the DAX has been rising, and the same thing has been happening to high yield and investment grade credits. And the real problem here, John, that I see is that investors have been piling up on a lot of risk, expensive risk, that now is becoming very dangerous in their portfolio. So we believe that this might be the correct time for investors to realize that they hold to some explosive credits as the economy is going to slow down and maybe offload them.
Right.
And in the European Union, we particularly don't like European subordinated bonds and COCOs, especially of banks, and also we don't like we don't like also companies that have news related like to trade wars or Brexit.
Right, so risk reward in the risky space looking distinctly tilted the wrong way there. Eurodollar, let's look at a chart here. We've been trying to look for that downside break. Has not happened. The 113 area we tested below there. I think the market really just waiting for these trade headlines. It's really a pesky phenomenon that we're waiting for this risk. This event risk, not knowing the timing. We also risk a delay of that announcement, even though March the 1st is supposed to be the nominal deadline. I say let's look at options, put options specifically, 111 put option for getting to the other side, all the way to the other side of the EU parliamentary elections in late May. That 111 put, given how low implied volatilities are, I think the potential for a move is actually larger than what the implied volatilities are showing if we are going to develop a downside trade there. 65, 66 pips as of this morning with Eurodollar trading around 113. Pretty cheap option there. The line you actually see on the chart is drawn at 110, the bigger line at lower. So you would actually be in profit on that option about 50% beyond what you risked on the premium if it's trading down there. So make sure you understand the options before trading them, but look at options as a way to trade that development in coming weeks. I think I'm going to skip over the Swedish inflation data today. An interesting release there for Euro stocky traders and stocky traders in general. Earnings calendar, Peter, what do we have here?
Well, we have had BHP Billiton, or the group it's now called, reporting pre-market, and the chart we're seeing here is that you can see the stock price, which is the black line, has been rising in tandem with the rising iron ore price, and there's now speculation that it could go to $100 because they're mentioning in their earnings release that we might see a total revision of how you do dams and mining capacities around the world around iron ore.
Especially in Brazil, where they've had all these mining disasters.
Yeah, so it will likely push up cost, and if we have higher iron ore prices, that will obviously be an input cost into the economy that could rise prices.
And since they don't have that issue in Australia, they'd be sitting pretty relative to Vale and the others.
Exactly.
Okay. Let's look at our calendar for the rest of today. And we have, again, the Swedish CPI. Some more UK data I think could be interesting, could be reactive to that because we're seeing those jobless claims coming up. So I highlighted that one, the UK jobless claims for January. ZEW, I think has been one of the best leading indicators on the direction for German economy. So look at the expectations component there and whether the current conditions also continuing to fall there. The Riksbank's Ingves is also adding color to the Swedish krona trades today. And I've got a chart here, this NAHB survey in the U.S., one of the better leading indicators on the interest rate sensitive housing sector. We can see how heavily it came off in Q4. And then we'll be looking at the U.S. FOMC minutes to see how profound the debate is within the Fed on the unwinding of quantitative tightening, if that is on the horizon. That's it for today. We'll be back tomorrow with the Saxo Bank Morning Call. Thanks for joining.